Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notes update for the 29th of April 2013. Morning, guys. Hope you had a fantastic weekend with family and friends. 4 Majors morning on the FX8 Ultimate template. And let's crack on. So, what did we have last week? We can have a look at the weekly just to gauge, see where price closed. You can see I've taken my fib level from the prior swing low that we saw back in 2011 to the current low, high that we had, current swing high here, to the low we had here in July of 2012. And you can see that the 23.6 and the 38.2 are the ones where price is trading in between at the moment. Funny enough, the 1300 is my major support and resistance level, which dissects both these lines, which is the white horizontal line you see on here. So you can see quite clearly to the start of January this year, we had this tweezer top formation. You had the institution moving average at the 50% retracement area from this downtrend that we saw through most of 2012. With this pullback, nice pullback, bounced higher, but came unstuck here at the institution. And then since then, we've seen price falling lower, and doing so, falling back towards 23.6, which happened to be a prior consolidative range. You can quite clearly see we've had hesitation in this area in the past, finding support there and bouncing up near term. So in a consolidative, not breaking above the 38.2 near term. What's my indicator list telling me on the right hand side? You could see quite indifferent. I look at these 4 time frames over here: the monthly, the weekly, the daily, and the 4 hour, to gauge where price or the sentiment lies. Is it either all red or majority red or majority blue? Here you can see very indecisive, which is not a good clean sign for the euro. However, we are seeing a lot of buying sentiment on our smaller time frames, our 5, 15, 30 and hourly, which is good, primarily because we have attempted the 38.2 fib retracement area recently, and we've had a slight pullback to the 1300, and it's now found a bit of support near term at the 1300, and it seems to me that we're seeing price potentially making another reattempt of the 38.2. So as it stands at the moment now, we have our red arrow not too long ago, but our candles are still blue. RMO is flat, and RMO pretty much tells us the strength of the trend, and you can quite clearly see at the moment now we are flat. And the MACD, which is also a nice great trend alert, you can quite clearly see that it's pulling back to the 0 line. So we had a lot of selling just recently. However, we've had this consolidation here at the 23.6, and we've seen the MACD making its way back towards that 0 line. So at the moment now, ideally, to see any definite move to the upside, we want to see this area here at the 38.2 being breached, and price trading above, because if it does so, then it's trading above the 20 period and the 50 period moving average, finding a nice support here near term, which it's done previously, which is good. And we need a breach and close above that 13,150 mark. So intraday, look for that close above, because at the moment now, intraday, this 38.2 is going to be our major resistance level on our daily, as well as our 4 hour, etc. So if we look into our daily time frame, you can see we have a buy signal just recently. The candle hasn't closed yet. Look at all the moving averages, guys, are all over the place. In fact, the institution moving average is also above price. So not a really good sign. So if you want to get above all this mess here, because it's consolidating, and if you are consolidating, you're not making any profit. So rather give it back to the market. Ideally, we want to be making higher highs. And it has been making higher highs. Yes, the institution's below price, acting as support here on my 4 hour. However, we've got swing low, swing low, swing low, and the current, we're seeing price reattempting the highs here, but we need to get above the 38.2 to be trading cleaner air. So it's up to you aggressively. If price can actually maintain this and close above the current high here, which is swing here that we saw just recently, then you can see the 20 period moving average is still to close above the 50 period moving average. 4 hour time frame, you can see the RMO is above the zero line, and the MACD is also showing us a bit of buying sentiment. And if you look at the 4 hour time frame, we don't have R squared with us, which is one where it's telling us the sentiments with us. So get above this consolidator range here, and near term you could target the upside. So from the prior consolidator swing to the upside here, you're looking at 83 pips. So there's still movement in here, guys, but we've got to get a clean, decisive move on our smaller time frames. A lot of buying sentiment through hourly, 30 minutes. So look to see if we can capitalize on that when we get above this consolidative range intraday, to target the 38.2, get above 38, then long term, ideally our daily, etc., target the upside towards a 50% line, which lies up at the where are we looking at here? We're looking at 1349, which is, if we get above this area here, is another 360 odd pips. So there's lots of profit on the table here if and when we get above this 38.2 level. Looking at sterling on our weekly chart, I've taken a fib retracement from the all-time high that we had back in 2007 to the current low that we had here in 2009, and since then you can see these red lines are from my projections. You can see how price since the fall hasn't really made any higher highs. It's just been consolidated, if you really want to be honest. But the sad thing is, though, these swings over here, these highs, for example, here's one over here back through 2009, another consolidation here, which is better part of the start of 2011, consolidation high. Since then, we haven't been making higher highs above the 38.2 fib retracement area. So from all-time high in 2007 to the current low in 2009, you can see the 23.6 and the 38.2 are the ones that primarily price has been playing with over these number of years. And the fact that it's not making higher highs is the concerning factor, because if it's not making higher highs, then we're not going to see price looking positive long term. And you can see that price since 2009 has been in this consolidative range. The most important figure that's been the major point for sterling recently is this 15,300. Since 2010, price has always found a reason to find support at this 15,300 mark. Okay, and near term over here, you can quite clearly see we had a breach of that area. Price fell to the prior consolidation area here, which was at the 14,800 mark, and subsequently pulled back. So profit taking through here and then consolidating at the 23.6. Now price is spending more time playing with this area. However, if we go to our daily time frame, and I just zoom in just so I can show you guys, you can see that price near term has a nice bull engulfing candle, and it's trading above that 23.6, which is that 15,300 mark. So as long as it maintains above there, then ultimately we should be looking for price to kick on to the upside. Close term. So what we can do now to get an idea of where price is likely to move to, you can see quite clearly we had a nice fall from the current highs, the consolidation highs up in January of this year, December, January, to the current low. So I can take a fib retracement from those areas. You can see the 23.6, the 38. Now it was important for price to get above 38, because not only is it straddling the 15,300, which is the 23.6, but it's on the positive side of that. So above 23, now we should look for price to target the 50% line on my daily retracement, and then a 61 would take us back towards that institution moving average. Price, the institution moving is still above price, which is still negative. You can see the only time frames over here where price is looking really positive is on our hourly and 4 hour. You can see that negative sentiment still playing through on our 3 long-term time frames. However, you can see there's more blue mid-sentence, so we're seeing a nice positive consolidation. So as it stands at the moment now, as long as it maintains above 15,300 long term, it's positive. And intraday, as long as it's trading above the 38.2 here, which happens to be the prior higher on our daily, then we should be looking for price to head higher. And as it stands at the moment now, we should be looking at the sterling making its way up towards that 15,800 mark. Get above that, then we can look at potentially the second target being up here, the 61.8, which is back towards our institution moving average, which is a good 170 odd pips to the target. As it stands at the moment now, where price is trading to that consolidator, we're looking at 77. So there's still momentum to the upside, and then we get a nice buy signal on a 4 hour time frame, and you can quite clearly see that really is the case. And if I can just zoom in here, just show you, see price breaking above the 38.2, pulling back, and then we get this extension higher. So as it stands at the moment now, look for price to continue towards the next level here, which is a 50% retracement on our daily, and you're looking roughly around 60 odd pips to that level. Get above that, then we should be targeting up towards the 61.8, which is back towards our institutional level on our daily, and between those levels we're looking at 170 odd pips to take away your spread. So there's momentum to the upside. It's broken above the prior high, which is positive. All our moving averages below price, so we're getting that upside movement. But you can see that the candles are getting really shallow now. Another buy signal on our hourly, which concurs because everything is in favor. But you could see, and it's very important, as price is moving higher, the candlesticks are very shallow. So they're well aware that the target above us is quite close. But the most important thing is RMO is making higher highs, which is important for an uptrend. Okay, swing these highs, and our MACD, you can see that it's working its way back towards the 0 line, which is great because it's telling us the sentiment is looking positive. Nice trend to the upside, which is great. So look for an entry level above the current high here, and then target that level to the upside. On to the US dollar Swiss franc. Let's have a look at this. Taking a fib retracement from our all-time high back in here in 2000 all the way to the current low that we had in 2011. You can see a major fall for the US dollar over the years. Not a really good one. However, you can see a noticeable pullback recently, and price making or reattempting the prior highs or consolidation area here around the 1000 mark, and coming unstuck at this level, unfortunately. So if I just zoom in here just to show you guys, clearly the institution moving average above price acting as resistance for this particular pair. We're looking at the indicated line over here. You can quite clearly see on the monthly time frame a lot of negativity. However, a lot of buying sentiment on our weekly and daily, primarily because price has been making higher highs and pushing back towards this level here at the 23.6 on our monthly time frame. Sorry, our weekly. So you can see that price has attempted this area in the past here, just below the 1000 mark, and the institution moving average currently governing that level. And unfortunately, once we got above that level, the institution actually pushing her back below the waterline. So it's imperative that this is to be a genuine positive bounce here. We do need to see price trading above this area as soon as possible. However, each time it's come in contact with the area, it's always been pushed lower. But momentum with the pullback, the actual fallback, has been shallow because the US dollar has wanted to rally further. RMO at the moment now is trading just shy, just on the opposite side. Let me just take you in so you can see that. Just below the zero line at the moment now. MACD is also pulling back and failing. You want the momentum to be in a true trend. You can see price has just been oscillating, so it's not on a really true trend. It's just moving sideways, as I mentioned. Not a really good call. What we can do is take the current low to the current high that we had here at the 100%, here at the 23.6 mark, and you can see the 23.6. So as long as it maintains below the 23.6 on our long-term, monthly, weekly fib retracement, then we should be looking for negativity. The institution is still above price, acting as resistance. And if I take the current low that we had in 2011 to the current high that we saw through mid 2012, you can see that the 23.6 pullback is in play right now. So quite a lot of consolidation, not really making any lower lows and higher highs, and in doing so, consolidating. And when price is consolidating, it's not making you a decent return. You want to be trading sentiment, you want to be trading clear momentum. And at the moment now, if I can just draw that on that, you can quite clearly see price just be moving within this consolidative range. So yes, there's opportunities to make money intraday. However, you're putting a lot of risk doing so, because you can see that your movements are quite sharp and aggressive. So you want to get trading out of this area here, particularly if the longer it stays below the all-time monthly fib retracement here at 23.6, which is just shy of the 97.08. Then we should still be looking for that sentiment to drag price lower. We have to get above these 23 and this level at the top here in order to be looking positive long term. You can see the institution is still above price, so it's very, very important. You can see the long term sentiment, the institution is above price. Daily, 4 hour and hourly price is above the institution. However, 30 minutes, etc., the institution is still below. So as it stands at the moment now, we want price to be kicking on, breaking this current high that we saw through the July of 2012, and as long as it fails to do so, then we should be looking for negative sentiment on this particular pair. Last pair of the day is US dollar Japanese yen. Let's have a look. This is on the weekly time frame. Take them all-time higher back in 2007 to the current low through 2011, 2012. 23.6 to 38 to 50. Quite clearly seeing the momentum moving with the US dollar since last year, the latter part of last year, and moving higher subsequently since then. And doing so, breaking above the 23.6 level, heading up towards that the 38.2 here, which was at the this level here at roughly the 9400 mark, consolidating there for a long period of time. If I can just zoom just to show you guys, a lot of hesitation through here on the weekly. However, breaking through, pulling back, and then the continuation up towards the 50% line. And this is where price has come unstuck now. You can see quite clearly that price is now, the anchors have been drawn, price is failing, and we've seen a pullback. Last week's candle, negative indeed. The RMO on this particular time frame, the long-term sentiment is still looking positive. Our weekly, monthly, weekly, and daily are all up. There's one or two areas where we have red arrows, but the sentiment overall is looking positive. However, if we want to see any further upside movement, we do need to see this current level here at the 50% line, 50% retracement level being breached here at 99,500. It's imperative to see price moving higher, and as you can quite clearly see, RMO is making higher highs, but the MACD is clearly fallen off as we head into this major area here. So ideally what we want to see is consolidation near term, and then a reattempt and a break higher. You can see the sentiment on our 5 and 15 starting to look a bit positive. However, in today, our sentiment is looking one of negativity because we are still in the consolidative range. So if I go to my daily time frame, there we go. You can still see that hesitation, a lot of resistance above price at the moment now, and price has pulled back significantly to the price consolidation area. So as it stands at the moment now, RMI has dropped off because we are heading into, you can see we made higher highs here on the RMI on price, but the RMI has clearly fallen level, but it's still below, still above the zero line, which is positive. Our MACD is clearly below because we've had a pullback. That's bound to happen. So what we want now is consolidation near term. Otherwise, if it fails to consolidate near term, it's going to fall, and it's going to fall back towards that price support and resistance level here in the shape of the 38.2 level, which is just short of the 93.67 mark on this particular chart. So an imperative to see higher highs, we do need to see the current high, all-time high here at the 50% line. Here's a 4-hour chart being broken. You quickly see we had a failure, and price is now heading to the downside. So what you can do, this is the previous move to the upside. If you want to look for trades intraday, take this move to the upside over here, take your 50%, take a fib level, move it to the current highs over here, which is roughly there, and you can see the 23 is being breached. 38.2 would be our next target, which is not too far away right now as it stands where price is trading. So from here to here, you've got about 50 pips. So there's enough there, which will take us back to primarily where the institution moving average on our 4-hour is complementing. Get below that in the institution, then we should be looking for lower lows, which will take us back to the prior consolidation low, a high here that we saw through March, which would complement the 50% line here, which is from 38 back to the 50%. There's another 80 odd pips. So there's profit to be made on the pullback, guys, and this is what you're looking for. You want to see all the sentiment intraday looking negative, and we want the R squared to complement that, so that's got to remain blue, but we need to see more negativity, and if that's the case, then we target these areas intraday as our first targets. Target 1 here would be 38.2, target 2 would be the 50%, target 3 would be the 61, and then back towards the long-term monthly level here at the 38.2, which is at the 93.78 mark. So that's it, guys. Hope it made sense. Just quickly went into the 4 majors for this morning. There are a number of trades we could trade here. Just look for genuine sentiment moves on our smaller time frames. Be patient, and then look at profits and risk. Very, very important to work that out. You don't want to be adding too much risk to your favor. Look where price is trading in conjunction to major support and resistance levels, and take it from there. Make sure if you are using the FX8 to please follow the rules of this particular template. If you're unsure and you want to know more about this particular template from us, please email us at info@sereneeducation.com for further information. Okay, very, very important. Other than that, have a fantastic day. Please have a look and see if there's any news out today. What do we have? We've got Japan had a bank holiday, so Europe, German prelim, CPI month-on-month figures all day today. It's sort of tentative. It's going to come out sometime today. The Italian 10-year bond auction, which is quite important. Then the US market later. We have personal spending month-on-month, the core CPR, CPE prices, and pending home sales figures. Important for the US market, the pending home sales figures. So there's some news, scattered news throughout today. However, please factor it in when you're trading. Other than that, have a fantastic trading day, and I'll catch you first thing tomorrow morning. Until then, you guys trade serenely.